Hello and welcome to Cafemutual's YouTube channel. My name is Swail Chagla and today I'm joined by Sumit Bhatnagar, Fund Manager at LIC Mutual Fund. Sumit, welcome to the show and could you tell us your background?
Thank you, Suhail. Thank you for giving me this opportunity. I am Sumit Bhatnagar, currently working as a fund manager with LIC Mutual Fund. Almost 25 years of experience spanning across banks, capital market regulator, and mutual fund industry. Pri- have been associated with LIC Mutual Fund for last 2 years, and before that, I was heading the equity investment vertical for India Post Mutual Fund.
Okay, so you have a lot of experience in the equity markets and that's actually what my first question is about. Considering the recent terror attack, the GST changes and the geopolitical changes affecting the world, what is your outlook for the Indian markets?
See, we are positive on equity markets or constructive on equity markets from medium to long term perspective. What we believe is while these incidents like your terror attacks or some geopolitical issues happening are are short term in nature, they can lead to some short term volatility. They do not affect the long term growth trajectory of your country. So, as also a lot of, so barring the terror attack, a lot of the global noise around your Trump administration's policy flip flops, or Russia-Ukraine war, or your Israel issues, most of them are in the price. What we need to focus on is what is happening in our economy. Our sense is that our economy is coming out of a period of lull that we witnessed in last 3-4 quarters. We expect the economic growth also to pick up, so won't be surprised if our economy grows at 7% plus in next 2 quarters, and FY27 also should be a similar type of a number. As also corporate earnings are coming back. So, if you look at this quarter's earnings itself, numbers have been much better than expectations, which were muted expectations actually, thanks to your monsoons and because of the GST announcements made earlier. As also, uh, as also the corporate commentary post result commentary has been a lot more positive and optimistic. We believe that earnings have bottomed out, and from here on we should see a significant pickup in corporate earnings. Next 2 quarters we expect a low double digit type of earning growth to happen. As also for FY27 and FY28, we believe that earnings can surprise on the upside. Low to mid teens type of a number is definitely possible for corporate earnings, and that is where our positive outlook is also coming from. So also, if you see the last 1.5 years of time correction that has happened in the market has actually
Right.
made valuations also relatively reasonable. So for someone who is looking to enter in the markets or looking to build up positions or add positions, this is a very good time to look at from 3 year or 5 year perspective.
All right. And Sumit, recently LIC has launched the LIC Consumption Fund. So could you explain the rationale behind this launch and why is it right now that you decided to launch this fund?
See, uh, consumption actually, or our consumption fund actually is a direct play on India's growth engine. The private final consumption expenditure, or PFC, actually forms 60% of India's GDP, making it a structural driver of the economic growth. So it's a play on your economic growth per se. As also within that, our fund is actually focused on discretionary consumption, premium consumption, aspirational consumption. So it's a very focused fund on insofar as the consumption is concerned. That segment of consumption actually has been growing faster than your broader consumption. So to put things in perspective, from FY11 till FY24, your consumption as a whole, or PFC as a whole, would have grown at around 9.5% CAGR, while your discretionary consumption as a space has grown at 13% CAGR. So that uh, you can easily see that the discretionary consumption is growing faster than your nominal GDP, and that is where your wealth creation opportunity would happen for investors. So that's what the rationale for the fund launch is. Insofar as timing is concerned, see, consumption is a secular theme, but what has happened is that in last 1 or 2 years there has been a slight slowdown in broader consumption, right? because of numerous issues. So your CPI inflation had spiked up. To counter that, RBI increased interest rates, sucked out liquidity, as also to manage the stress in the system. Some credit norms were changed, lending norms for unsecured lending norms were changed. Now all those things have been reversed. So you have seen 100 bips of rate cut coming. Liquidity, which was in deficit, has turned into surplus. Then your a lot of your lending norms also have been rolled back. And at the same time, in February, the government has cut income tax. So for someone who's earning less than 12 lakh rupees, now there is zero tax. So that is leaving close to 40 to 50,000 rupees per annum permanently in the hands of a consumer. As also the GST cuts that have been done just in October, they are actually a big consumption support. So just to put things in perspective, a typical lower income or a lower middle income household spends close to 65% of its overall in household income on your basic
Right.
necessities. Now the
Hmm.
GST cut of 10% on that segment has actually again uh, is leaving actually a substantial amount again in the hands of that consumer. So these two combined, along with the pay commission that is expected, the central government pay commission that is expected in CY 27, and state government pay commission that is expected in CY 28, are going to leave close to 5 to 6 lakh crore rupees per annum permanently in the hands of consumers. So what we believe is that for next 5 years, consumption as a whole should grow faster than your nominal GDP. And within that, discretionary consumption or your premium consumption or your affluent consumption or aspirational, whatever you want to call it, is going to grow even faster. So we believe this is a very good time for consumers, for for our investors to look at consumption as a theme uh, favorably, as also focus on themes or focus on funds that are play on discretionary consumption, premium consumption, aspirational consumption. That's where we believe that a lot of wealth creation opportunities would emerge in next 5 years, next 10 years.
Now, that's a great answer. But moving to the category to which consumption funds belong to. Now, thematic funds can be used for tactical allocation.
Right,
However, one key point is that the entry and exit plays a big role in thematic funds.
right.
So, how can distributors gauge when to enter and when to exit?
See, there is no clear-cut answer to the entry and exit portion. And insofar as the consumption thematic is concerned, we have to think of it as a structural opportunity. Don't look at it as a tactical allocation, or don't look at it as a 2 year, 3 year type of an allocation. So a discretionary consumption has been a share of discretionary consumption in overall basket or consumption basket has been growing for almost last 30-40 years. Discretionary consumption was just 15% way back in 1980. Now that has jumped up to 45% and is expected to be a 55 or a 60% number in next 10 years. So
Mhm.
discretionary consumption or the themes that uh, focus consumption themes are based on actually are a long-term opportunity. Having said that, if someone still wants to look at entry and exit points, one can evaluate and track your macros and policy trends. So basically, monitor government reforms, budget announcements. So if government further gives your some more tax cuts are announced, or some more incentives are announced, or some GST rationalization further happens, all these would support consumption. And then sector-specific incentives also can trigger thematic outperformance. Secondly, you also need to track valuation matrices. So compare sectoral PE or price to book ratios to historical averages and look to enter when valuations are reasonable or broadly in line with the historical averages, or consider a PEG ratio as well, which suggests that okay, while valuation may be same, growth is going to pick up. So on a peg basis, the sector or theme is reasonably priced. And exit when they become excessively stretched or when your goals are met. Then
Right.
then another point to track can be your earnings and demand outlook. So look at the earnings upgrade cycle. How is it coming? So if uh, whether distributors will be able to do it, maybe not. But look at corporate commentary, track earnings upgrade. That can be another trigger to decide whether it's time to participate or time to move out.
All
So
right.
these two three would be key triggers for me to watch out for insofar as deciding entry and exit are concerned.
All right, I understand. And you already spoke about this a bit earlier, but I'd like to get a extended response from you.
Sure.
What key trends do you think are currently shaping consumer behavior in India? Are you witnessing any structural changes?
See, the biggest structural change that we are seeing is that our consumers or we as a society are changing from a savers economy to a spenders economy. The psyche are changing from generation to generation. So a Gen X to which I belong, or a millennial, or a Gen Z, they have all very different consumption patterns and consumption priorities. So my generation never knew brands actually. So just to give you an example of clothes, so all our clothes that we used to use were stitched. We never, so we used to get a cloth taken up. We used to purchase a cloth or a piece of cloth from a shop and got it stitched. We never were bothered about whether it was a Allen Solly or a Arrow or a Van Heusen. Now the younger generation is all about brands, all about premiumization, all about looking at buying from your supermarkets or from high-end stores or online shopping. So another key trend can be digital first shopping. So India has close to 900 million internet users, and they are driving your e-commerce, social commerce, quick commerce type of adoption. That is also changing your consumption, and which is also a function of the Gen Z phenomena that we are witnessing. Then another interesting thing that is happening is experience over ownership. So younger generations are prioritizing experiences, personalization, immersive interactions over material possessions. So brands
Right.
offering a AR or a VR or a gaming engagements will win loyalty. Or you can see the influencers or social media also is playing a big role in a consumption these days. So they are so your brand ambassadors or the kind of people that you are employing as brand ambassadors also would have a significant impact on the brand purchases. Then another thing that we are witnessing and which is now becoming more of a secular trend is premiumization. Just to give you an example, classic example is our car segment or passenger vehicle segment. Till about 2022, India used to be a small car market. So predominantly we used to buy your Wagonars or i10s, i20s of the world. Suddenly something changed. And now the share of those small cars have actually gone down from two-third to one-third. And what has it replaced? It has been replaced by SUVs, your high-end cars. So now they now account for almost 67% of the passenger vehicle segment. And people are preferring high-end, fully loaded vehicles with all the features included. So that is one example. Then premiumization is happening across your categories, where right from your shoes to even something like your detergents that you are using for washing your utensils or washing clothes. Premiumization is playing out across segments, and that's a big change that uh, we are seeing. Another interesting change that we are seeing is health and wellness focus. So thanks to the information availability on internet or through your peer group, people are now making a lot more smarter lifestyle choices. So your gym memberships are going up, your yoga memberships are going up, and even something like a health checkup. So till about 10 years back, the annual health checkups used to be a rare thing. Now it is becoming a normal thing. So almost 70% of the people working in organized space now are getting their annual health checkups done, whether through their corporate tie-ups or otherwise. So these are some of the few changes that are happening in the consumption as a space.
All right. And as we know, India continues to be one of the fastest growing economies in the world. And it's projected to be the third largest over the next 3 to 5 years. Now, where do you think consumption plays a part in India's growth?
See, India's USP or India's capital markets USP has been that it's more of a domestic economy, or it is or share of its interaction with external world is even now net negative, right? So bulk of our GDP growth is coming because of domestic factors, and in that, your discretionary consumption or your private consumption, sorry, Your consumption in general, which is classified as private final consumption expenditure, accounts even now for 60% of India's GDP. So, a significant growth or strong growth in this segment is actually a key driver of your economic growth. Then, uh, then think of it this way, that your demographic advantage that you have, your young aspirational population with rising incomes, your per capita income, which is currently around $2,700, is expected to move up to 4,400 by FY30. Then urbanization. So a lot of people are moving from rural areas to urban areas. A lot of tier 3, tier 4 cities are seeing a lot of development and moving from semi-rural background to your rural to your more urban setup. These would actually fuel a significant economic growth going forward. Then digital and e-commerce. So what essentially these your digital and e-commerce boom is actually doing is setting up newer and newer opportunities, opening up newer companies, newer sectors from where significant economic growth is coming. This economic growth, this online growth that we are seeing may not be getting captured in your official GDP numbers or official growth numbers, but they are actually creating lot of opportunities for employment, for job creation, and as also contributing a lot to the economic growth of the country. So, that's how I think consumption is going to help our economic growth going forward.
All right, thank you for that answer. And now my last question is, what message would you like to share with the distributors and investors of India about this fund and the overall consumption story?
See, like we discussed, the private consumption or your private final consumption expenditure, as you technically call it, is 60% to this GDP. So this theme is central to India's journey to becoming the third largest economy, right? So this is a structural story. Consumption is not a 1 year, 2 year thing. It's a multi-decade story. Within that, the structural tailwinds are intact. So your incomes are rising. Your urbanization is picking pace. Digital adoption, premiumization, all these are going to ensure that there is long-term demand across categories for various products. And this these trends are only going to gain traction over next 5 years, over next 10 years. Then, uh, then the role of Gen Z is very important to understand insofar as Indian consumption story is concerned. They are actually acting as a catalyst for the entire consumption. What do we mean by Gen Z? Typically, people who are born between 1997 to 2012. They are right now 1 in 4 of our population, and hardly 1 in 4 of them are in working age, right? So they are still impacting almost 45% of your discretionary consumption. And imagine a situation where 10 years down the line, 3 out of 4 of these guys would be in the job market. So the kind of spurt that is going to come to consumption as a whole and discretionary consumption specifically actually is going to be very robust. So point is that consumption as a theme is structural. Within that, multiple levers are available, multiple factors are aligned right now for discretionary consumption to grow faster than nominal GDP, as also we expect this thing to continue for next 10 years at least. Now, uh, about the fund, our uh, fund is a perfect vehicle to exploit this jump in discretionary consumption that we expect over next 10 years, as it is focused on discretionary consumption, premium consumption, affluent consumption, aspirational consumption.
All right, well, thank you for your answers, Sumit. I'm sure you enlightened a lot of our viewers watching from home. Are there any other words you'd like to say?
See, what we have come up with is a very interesting opportunity on an emerging consumption trend, which is going to create significant wealth opportunity, or which is going to throw up lot of opportunities, a lot of new companies for us to invest in. Would suggest investors to consider this fund in their overall portfolios from the analyze it from the risk reward angle, or whatever risk allocation your risk profile permits, and look at this fund favorably.
All right, well, that's all for my questions. Thank you, Sumit, for joining us today, and thank you for the viewers watching at home. We'll see you next time.